well, joining in on the show right now. Sandip, hi, afternoon. Queues seem to be drying up for the market. Do you think the next big one is now only going to be once that 90-day period on tariff ends?
I think the tariff issue is well baked into the markets, and that's also reflected in the way the global volatility is playing out. So, in terms of cues, like obviously the result season got over. Now markets will be looking forward to the monetary policy tomorrow, what comes out of that, and the commentary out there. And then it's how the economic data plays out. So, cues will be limited. If at all, there'll be some news flow that will be related to the various trade deals, etc. So that's something we need to watch out for. Macro-wise, markets look reasonably well placed. So uh, I think what's been pressurizing the market has been the constant flow of bulk deals, etc., which they have been pressurizing the markets. So I think overall, markets I think are okay. There's nothing to be negative about in the markets.
Negative about, but is there something to be positive about? Kunal, hi, afternoon. Been quite ranged on the markets for a while. What is the trading activity telling you? Where are we headed next?
I think except for that last, I think half an hour or mid-session today, where there was a flurry of a sudden jump in the Nifty, where it came very close to that 25,000 mark, 24,900 thereabouts. So I think other than that, it's been a very docile phase for the markets, very stagnant. We are stuck into this 500-point band for the Nifty. But the good part is that many of the stocks and sectors are seeing a breakout for themselves every now and then. Even on the VIX front, the good part, and it's a surprise because generally heading towards a crucial event like the RBI policy, we generally expect that in a normal scenario, VIX would probably have been on a rising method. But this time around, we are actually seeing in the last 2 days VIX cooling off. This generally indicates that markets are not anticipating any major kind of a surprise, at least on the negative side. And in return, it also indicates that we are not expecting any major kind of a volatility in the market. So I think on the back of this, we can expect that the markets may continue to remain into this range.
Okay, Kunal, hold that thought. Let's take it across to Shrishti, who's waiting by, because Beijing has tightened its grip on rare earth magnets, which are vital components in everything from smartphones to fighter jets. But more importantly, these magnets are indispensable to electric vehicles, and China controls 90% of their global production. Indian automakers are bracing for supply disruptions, while global majors like Ford and BMW are already feeling the pinch. Shrishti is joining us to tell us if this will throw a spanner in the EV revolution, Shrishti.
Well, yes, there's a new problem brewing in the car makers, and it starts with something that you can't even see. It's inside your EV motors, your wiper, even your headlight. And we are talking about the rare earth magnets. Small in size, but huge in importance. And it majorly started in April, wherein China made a major move, wherein companies must now get a special government permission to export the magnets made from rare earth minerals like dysprosium and terbium, to name a few. Now, these magnets power everything from smartphones to fighter jets. And here's the catch, because China controls 70% of the rare earth mining and 90% of the world's magnet production. Now, countries like India will need documents providing how these magnets will be used and that they are not for military purposes. These are the new disclosures that Indian companies have to come out with. But now you may ask that why does it even matter and how big an impact it can have on the Indian auto majors? Because electric vehicles specifically, they need a lot of these magnets, almost 3 kgs per car compared to just 100 grams in a normal petrol car, because these magnets actually help the EV motor to run fast and smooth as well. And without them, EVs can't even move. So yes, it is a concern and an involving situation indeed. But companies are now being vocal about it, and in the Indian markets as well, we have so many Indian companies now coming and talking about that. Case in point being Bajaj Auto, where they say that they can see a delay in the production post the July, and they are hoping for the situation to improve. But for now, yes, this is a developing situation. We have the comments from TVS Motors as well, where they are anticipating a short to medium term challenges because of this disruption. Other than that, we have comments coming in from Mahindra, where they are saying that for now they are covered for 2 months, and then we have Tata Motors and Maruti Suzuki. They are maintaining the stance that they do not foresee any immediate impact on the production numbers. But it's not just about the Indian auto majors. It's even the global companies like Ford and BMW. They even actually have to go ahead and halt their production. And today morning we have the comments from Suzuki. They even said that one of their models can get a hit because of this EV magnet shortage. So indeed, this is a big concern that is indeed brewing in the Indian auto major and impacting the auto industry as a whole. So while EVs are the future, a small magnet is holding the wheel. With China tightening control, automakers around the world are now racing to secure the supply lines or the risk hitting the brakes. Back to you.
Right, Shrishti, we'll take it from there. Sandip, this is almost smacking of, when we came out of the COVID lockdowns, the issue that you had in the supply of chips, right? And that was also impacting the auto industry to begin with. It is a niggling worry, yes, and there will be that supply disruption, but eventually it eases out and the companies do find their own way. In the interim, though, who do you think is going to be the hardest hit?
Out there, the chip shortage was actually a real shortage. This is an artificially created shortage by the Chinese government because they have restricted the exports of these while they are readily available. So it's not that they are not available for export, they are not being allowed to be exported. So there's a difference between the two. So whether they have an intention of resolving it or not is something we need to see, or what's their strategy out here. Because finding a replacement or building in technologies to yourself extract and refine these will be a time consuming thing. So we need to see how this plays out. Maybe it could just all these things could just be signed and it could ease out over the next 15 days also, or it could get prolonged. So from among the companies which have indicated issues, I think the two-wheeler EV companies have been more vocal. Some of the four-wheeler companies are still saying they are reasonably well covered. And some of the pure EV companies, they might get more greatly impacted in the near term. And it's a worldwide thing. It's not specific to India. It's a global phenomena which is playing out.
Okay, so that's the take on the auto space. But Kunal, I want to stay with the auto space and I want to ask you your view on M&M going ahead, because fundamentally the numbers have been stellar over the course of many months in their auto sales numbers. But if you take a look at the stock move on a year-to-date basis, M&M is up only 1% on a year-to-date basis that we're talking about. You have names like TVS Motor, Maruti, Eicher that have overtaken M&M's stock performance. Do you see this exuberance that we're seeing in the numbers play out on the charts as well?
No, not really, Sneh. So, I look at it this way: the last 3 years, the average, gain for M&M was around 45 to 50%. In fact, last year the stock moved from 1,700 to 3,000. So, it almost like it doubled in just the last 1 year. So it's bound to be a phase where on a YTD basis the stock may underperform. But there is a different scale which one has to look out for comparing stocks like M&M. The stock which was absolutely resilient even in the phase when the market saw a major correction. Look at it this way: September 2024 onwards till say Jan-Feb 2025, there was a phase where many of the four-wheeler stocks, they were down 40-50%. Even many two-wheeler stocks like Bajaj dropped very sharply. And that was a phase where M&M still remained into a range. And the correction, I think, was just largely about 20-25% for a stock like M&M. And now when the markets have recovered, the stock has come back towards...
Kunal, we'll get back to you. I believe we have you on a patchy line. But in the meanwhile, Sandip, talk to us about the moves that we're seeing in the pharma space every day now for the course of the week. We've had some or the other news flow coming in either on the diagnostic side or you have them on the specialty pharma side. Today, you have news coming in on Dr. Reddy's, wherein they've collaborated with another company for a drug. We've had US FDA, issues coming up. Form 483s have been issued. Today, Gland Pharma also in focus on the back of 11 observations coming in from the French medical head over there. So give us a sense of where you are seeing this pharma space headed for here in terms of the regulatory issues that this sector is facing currently. Because all in all, while it may seem resilient as a defensive sector, it's not been doing all that well recently.
Pharma has been in the news flow for several things, and I think, and there was also news of tariffs being put on pharmaceuticals, which are, I think, under pressure of creating inflation, have been curtailed for now in the US. So there's a threat of that also coming in. Overall, as we have evaluated the pharma company results as well as the outlook, in the near term, there are no triggers for movements on either side, I would think, on a broad sector basis. So uh, I don't think there are any major triggers for upside or downside, and valuations are also middling. So it's not that the stocks are either cheap or expensive. So I think most of the stocks will follow individual news flow.
Yeah, individual news flow it is going to be, but the one space you can't get your eyes off is the entire capital markets sector, right? It's been on fire with BSE, CDSL, both up more than 30% in just 1 month, while of course the much awaited NSE IPO could also be making some headway. Varun is here to walk us through this mega trend which is playing out in equity markets.
Off late, we have seen a good rally in exchange-related stocks. NSE in the unlisted space and BSE in the listed space, both are actually trading at their life highs. If you look at NSE Limited, from 1st of May, the stock has actually rallied more than 50%, and from 52-week low, the stock has more than doubled. Also, if you look at over the valuation, the overall market cap for NSE Limited has actually crossed 5.8 lakh crore. The valuation is around $67 billion, and actually it is more than Nasdaq Inc. and also Deutsche AG. For BSE Limited also, you look, from 52-week lows, the stock has run up more than 4 times, and also in last 1 week, the rally is more than 13%, and in 1 month, the rally is more than 30%. It is not only BSE Limited and NSE, but also if you look at the rally in CDSL stock, in last 1 week, the stock is up by around 13%, and in last 1 month, the stock is up more than 30%. Now, there are several reasons because of this, because of which the stocks are rallying. One of them is strong financials, rising interest from the overall retail space in the capital markets. Other than this, if you look, the NSE IPO, there were several regulatory hurdles because of which NSE IPO was not able to come, but now it is expected that sooner or later you will see NSE IPO hitting the capital markets. Also, if you look, recently BSE has declared bonus issue, and because of this there was price adjustment, and actually people on the street believe that because of this, the overall liquidity in BSE Limited stock has also increased, and hence you are seeing more buying in BSE Limited stock. If you look at the valuation of NSE Limited, BSE and CDSL, NSE actually trades at around 47 times PE, BSE trades at around 86 times PE of the current year, and if you look at one year forward, it actually trades at 56 times PE. Even CDSL trades at around 68 times PE. So you will look that the overall PE for these companies are little high, but because of NSE's IPO, you are seeing a valuation catch-up rally in other stocks like BSE Limited and CDSL. But yes, all the stocks related to exchange are seeing a good run-up, especially in last 1 month.
Absolutely, Varun. Thanks for taking us through all of those details. And Kunal, we have Kunal back with us. Kunal, that's exactly what I wanted to get a chart check from you on. All of these capital market themed stocks, be it CDSL, BSE, like Varun was just talking about, or for the likes, you have CAMS, Angel One. All of these stocks have done pretty well over the last 1 month. Sharp run-ups is what we've seen. Do you see this sustaining on the charts?
It seems like it should sustain staying. I think many of these stocks have actually confirmed very big volume breakouts. So I was looking at Angel One, for example, that stock has done exceptionally well. CAMS, CDSL, BAC, I think many of these exchange-related stocks also have done reasonably well. Even the other stocks like JM Financials, DAM Capital, etc., many of these stocks have started to show signs of a very good volume price uptick move. So when you see such kind of a strong move, which has been built by much better volume patterns, strong indicators, robust price action, that's a move which we believe should sustain as well as build further.
Sandeep, assume someone has completely missed out on the rally that, the capital market theme itself has actually staged in terms of the listed pool, or for that matter, not had access to the NSE pre-IPO allocation. Where can they buy now?
So I would think that if we are looking at them fundamentally and from a earnings growth perspective, I think the big up move in the earning growth potential has already played out. So I think from here on, these are steady growth stocks. So given the monopoly nature and the entry barriers into the business of many of these companies, I believe longer term they'll continue to do well. But all the companies which are being discussed are priced to perfection in a way because 70-80 price earning ratios are at the very top end of the valuation paradigm. So I think it's tough for valuations to go up further. So people need to look for. So these stocks typically have a high beta on both sides of the market move. So when markets fall, they fall more than the markets. When markets rise, they rise more than the markets. So people need to look for opportunities when markets fell. So I think in the first quarter, many of these stocks corrected 30, 40, even 50% from the top. So, but at that time, no one wants to buy. But when they come into frenzy, people want to buy when the risk is much higher.
Point taken, Sandeep. We also have Jatin Gedia, Technical Research Analyst at Mirae Asset Sharekhan, joining us on the show. Jatin, hi, good afternoon. Thanks so much for joining us on the show today. Give us a sense of where you're seeing the broader market headed going ahead, because even when we've seen a slight bit of a blip coming in the market, you've had the broader end, the SMIDs that have been resilient. But particularly what I want to get your view on is the small cap space, because you have the mid cap that sometimes gives into the market pressure, but that is not seen on the small cap index. Help us understand where you see the broader markets headed from here on.
Yeah, see, overall, we believe that the broader market has been outperforming the benchmarks for quite some time because the index has been more or less range bound since last 3 weeks. However, the mid cap and the small cap index has been inching higher. So, yes, the broader market has been resilient. If I have to give levels on the Nifty small cap index, then there is a potential for the Nifty small cap index to rise towards 18,800 on the upside, and the crucial support is placed around 18,100, 150. So the risk reward is quite favorable. Also, there is a lot of sector rotation that is happening. So some of the uh, stocks which are not formally part of sectors like capital markets theme, some of the FM fertilizer pack chemicals. See, all these stocks are rallying quite a bit. So we believe that the broader market strength is definitely there, and we believe that the benchmark also is likely to join in the party going ahead into the RBI monetary policy. Yes. So overall, things look positive. In the broader market, and we believe that the Nifty and the Bank Nifty is also likely to join in from tomorrow onwards.
Okay, so that's an optimistic view coming in. And Sandeep, I just want to talk to you a little bit more about the policy outcome tomorrow. The street is largely penciling in a 25 bips cut. Help us understand that while for the rest of the street in terms of consumption, this may be a positive, you could have a little bit impact on banks and NBFCs. Tell us, how do you see these sectors playing out? Because even after tomorrow's meeting, the street is still expecting another 25 bips cut in the year ahead. So what do you think the impact is going to be on the entire financial space?
An easing cycle is always positive for the asset quality of banks and NBFCs. So to that extent, the valuations get a support. In the near term, in the immediate context, because of the fact that deposit rates move down slowly, the margin get hit somewhat. But I think now get that we are in the third rate cycle cut. We are in a space where the adjustment cycle will be happening in a normal phased manner. So to that extent, for the overall financial space, it's positive. It's more positive for companies which actually benefit due to rate cuts, like infrastructure, capital good companies, autos, consumer durables, etc., where rate cuts, or real estate, where rate cuts, rates moving down actually benefit those segments much more. NBFCs benefit much more due to on a rate cut cycle than banks, because NBFCs don't have a retail deposit book, whereas banks have. so they don't have CASA deposits. So a rate reduction cycle is beneficial for NBFCs much more than banks in general.
Okay, that's what the rate cut, or rather